Back with the market, let's throw focus now on APL Apollo, given the rural and urban demand trends that one is currently seeing, and of course, the surge that once again one is witnessing in PVC pipes. So let me welcome on board Anubhav Gupta from APL Apollo on the show right now to talk a little bit more about how the prospects of the business are shaping up with the second wave now behind us. Anubhav, I beg your pardon. Good to have you on the show. Thank you so much for taking the time out and joining in. Just wanted to understand, Anubhav, the demand that one saw in the first quarter was clearly impacted because of the regional lockdowns. In the second quarter, one assumes that was not the case. A, what is your reading on the ground? And more importantly, is the rural recovery continuing to outpace what one is seeing in urban demand, or is it vice versa?
Hi, good morning. So yes, Q1 was impacted due to lockdown, but our company performed best in the sector in this space. The rural demand was strong in Q1, which resulted in decline of 20% YOY. Our QOQ volume for us versus the sector was struggling with 25-30% decline on QOQ basis. So we continue to gain market share in the rural areas on the back of weak organized players or maybe unorganized players also. So the strategy is to continue to expand distribution network in the rural areas and launch and keep on launching new products within the pipeline. So that's helping us gain market share.
Sure. Also wanted to understand how costs have actually moved for you. And after the slight correction that one saw in PVC prices and then the surge again, could they go back to the April-May levels?
So yes, I mean, there was some correction after a very sharp surge in the PVC prices, but now they are started to go up. But it doesn't impact our business model because we work on a clear pass-through policy. So whatever prices are revised up or down by the PVC suppliers, we immediately pass it on to our customers. And we work on very low inventory levels, right? So it doesn't impact our business model much. It's just that there is some phenomena of restocking or destocking by the channel partners, but that is also like 10 to 15 days phenomena. So our business model is based on the capacity expansion, what we are doing in our plants, the market share gains, what we are looking in the rural markets and in urban markets as well. Our strategy is based on the new product launches in the water tank space, adhesive space, CPVC, focus on fittings, right? So it doesn't impact much whatever the increase or decrease in the PVC prices. But yes, they have started to move up after a bit of correction.
Mr. Gupta, Alex joining in. Could you quantify those market share gains for us in the segments that you operate in? And also, when you're talking about those market share gains, is there a trend that is ongoing in terms of a consolidation from the unorganized players to the organized players? Are you benefiting from that?
So if you see this PVC pipe industry is like 30 to 35,000 crore in total size, right? In last 3 years, we almost doubled our revenue from 270-80 crores to 520-30 crores in FY21. And in Q4 of FY21, we did a revenue of 170 crores. So the volume CAGR has been like the revenue CAGR has been 25-30% for us in the last 3 years, but the industry has not grown at the same pace. Even if you look at the top players, the growth is like high single digit to low double digit. So this clearly shows that we have gained market share here, and the trends continue to be similar for us because there is a lot of stress in the unorganized sector. Right from demonetization, which took place in 2016, then the GST shock in 2017, then the NBFC crisis in 2018, then the GDP macro slowdown in 2019, then in 20 there was COVID wave 1 lockdown, then in 2021 COVID wave 2 lockdown. So this has brought a lot of stress to the sector and players who are in the organized space, players who are leveraged, over leveraged, having weak balance sheet and margins, they are struggling, and similarly unorganized sector. So what we have seen is that the players in the organized sector with strong balance sheets, with strong product portfolio, with strong brands, strong distribution network, they are gaining market share. So we are hopeful that we are confident, in fact, that we will continue to gain market share over the next 2 to 3 years.
Okay, you already spoke about the model and the fact that you're not too badly affected by raw material increases. But I'm just trying to understand from what you've said so far, especially with regard to consolidation in the space, could we then assume that pricing power remains with you and profitability and margins are not going to be affected? Could you take us through a range maybe that you expect that margins will come in at for the rest of this financial year?
Yeah, so if you see our last 2 3 years, our margins has been in the range of 13 to 15%, right? And that's what we have created our business model on, right? So over the next 2 3 years, with the value addition today, the building material segment, which is high margin product segment for us, that is contributing 50% today, and 50% is agriculture, which is slightly low margin compared to the building material space. In next 2 3 years, whatever the new product launches we have, whatever the capacity ramp up will take place, we would be 60-70% building material and 30-40% agriculture. So that mix is going to improve. So margins from 13% would inch up to 14-15%. At the same time, we will increase our ad spends, which have been around 1 to 2%. Our target is to take them to 2 to 3%. So without hurting the EBITDA margin, we should maintain the margins at 30 to 15%, even with the increased ad spends, which is going to enhance our brand equity for the overall PVC business.
Right. Also, just wanted to understand in terms of what one is seeing with regards to the commodity cost pressures right now, Anubhav. And what is it that you're witnessing on ground, how it tends to impact your business as well and your own production costs?
So like I said, that we work on a clear pass-through model, and not only Apollo pipes. If you look at all the large players in this space, everyone is working on the same model. And see, commodity prices have been on the surge since last year after this supply chain rebalancing shaping up because of COVID lockdown globally, which happened last year. And it's not only PVC. You take any commodity, whether metals or oil or gas or cement. Everywhere you are seeing the input prices going up, right? And the contractors, the developers, the architects, they are also taking into consideration that yes, input prices for construction are going up. So the contracts are being renegotiated, or the new contracts are factoring in all this increase, right? So like I said, apart from like 15 days to 30 days phenomena of restocking or destocking, it doesn't impact much, right? And we work on very minimal inventory levels, and within PVC and CPVC, the prices for PVC have been volatile, but CPVC have been quite stable. So I mean, 1 to 2% of here and there impact in 1 quarter is what would be there, but not beyond that.
Anubhav, good speaking with you and getting a holistic view on what's happening with the PVC resins market, or for that matter, what's happening at APL Apollo in particular as well.